And what if I told you the war, the inflation, the chaos isn't killing the dollar? It might actually make it stronger. Sound insane? Good, because that's exactly where the edge is. Today, I'll try and break down this framework, this theory. Is simple, it's brutal, and it's widely misunderstood. And by the end, you'll see why, you'll see the market absolutely, totally differently. Here is the first thing you need to understand. You're not trading currencies. You are trading a relative game, not who's strong, but who is less weak. And that is where the most traders get destroyed. They look at the US and say the debt is exploding, inflation is rising, the system is broken. And they conclude the dollar must fall. Logical, right? Correct. Not even close. Because here is the problem. Every other country is worse. Let's that sink in. Russia, worse. Europe, worse. Emerging market, way worse. So when things break, money doesn't go to the strongest. It runs to the least broken. And right now, it's still the dollar. If that just flipped your perspective, good, because I'm just getting started. So let's simplify it even further. Picture the global economy as a giant milkshake or a giant drink. Every country pours in money printing, debt, liquidity. Now imagine there is one straw, and that straw belongs to the US. Now that's the system. The dollar is a reserve currency. Global trade is priced in dollars. Debt priced in dollars. Energy settled in dollars. So when the stress hits the system, everyone needs dollars. Not wants, needs. And what happens when everyone needs the same thing at once? The price goes up fast, violently. Now that's the framework, that's the theory I was talking about. It's also called the Milkshake Theory by Brent Johnson. He does a great work. I love his work. It's just that I also have the same thought process, and but he's the way he puts it, it makes it a lot easier to understand. And then that's the milkshake, that's the drink. So the US doesn't just drink, it sucks the liquidity out of the entire world. Now let's talk about war. Because this is where people get it completely wrong. War breaks out, oil spikes, supply chains get hit, inflation rises, and traders think this is bad for the dollar. But here is what actually happens. Step one, panic hits the global markets. Step two, investors, they dump risk. Step three, they scramble for safety. Step four, finally, they buy dollars. Why? Because they have debt denominated in dollars. They have to service it. They have to pay it. So they rush into USD. Not because they love it, because they are trapped. This is the key insight. The dollar isn't strong because it's perfect. It is strong because the system is built around it. It's the centerpiece. So let me say that again. The dollar isn't winning because it's strong. It wins because everybody else is stuck playing its game. Here, where it gets deeper, there's something called the euro dollar system. And no, it's not about Europe. It's about the dollars held outside of the United States. Trillions of them. Banks, corporations, governments, all over the world. The borrowing and lending in the USD. Now, here is the problem. When crisis hits, the dollars disappear. Liquidity tightens, and suddenly everyone needs dollars they don't have. So, what do? They sell everything else stocks, gold, commodity, currencies to get dollars. This is why, when major crisis, everything crashes, but the dollar spikes. It's not logical. I know. I don't want it to happen. We hate dollar. We hate Trump. We hit the US. I get that, but it is structural. That's why it happens. So if you're still thinking gold goes up in every crisis, you are about to get humbled. Stay with me. This is the paradox most traders cannot handle. In a real squeeze, you don't get gold up, stocks up, crypto up. You get everything down except the dollar because the liquidity disappears. Cash is king, not assets. Cash. This is why. Emerging markets, they collapse. Commodities are dumped. Risk assets get destroyed. And the dollar rips higher. Not It's not about value, it's about survival. Now, here's Brent's controversial point. The US gets hit, but less than everyone else. Why? Because of the three reasons. Number one, energy independence. The US has oil, it has gas, it has resources. Others rely on imports. So when the supply chain breaks, they suffer more compared to the United States. Segment number two, capital markets. The US has the deepest markets in the entire world. So when money needs home, it goes there. Not because it's perfect, because it's liquid. Now, third is military and political power. I know it's controversial. Let's not sugarcoat it though. Power matters. US can project force globally. It stabilizes confidence in the system, even if people hate the United States or hates its politicians. So here is the uncomfortable truth. In a global crisis, the US doesn't need to win, it just needs to lose less. Now, let's go deeper into something most people won't say out loud. What if disruption isn't just a side effect? What if it's part of the strategy? Think about this. If global supply chains get disrupted, it's happening right now. The energy flows get restricted, happening now. The trade slows down, happening now. Who suffers the most? It's not the US. It's of Asia, Europe, emerging markets. So even if the system gets messy, the relative position of the US improves. This is not about perfection, guys. I keep saying that over and over again. It's about positioning. Here is a powerful analogy that Brent uses. It's from his movie Goldfinger. The villain didn't want to steal gold, he wanted to make it unusable. So nobody else could benefit from it. Now apply that to geopolitics. You don't need to control resources, you just need to disrupt the access to those resources. Talk about Strait of Hormuz and what Trump and Iran are actually doing to it. If the global energy routes get blocked, it's happening, the supply chain breaks, the trade slows, and then suddenly the currency with internal resources win. And again, that favors North America. So if this is making you rethink everything, good, because this is where most traders get blindsided. So let's translate this into trades. So in this theory, you get a strong dollar, weak global currencies, pressure on commodity initially, crashes in emerging market. But here is the twist. This doesn't last forever because eventually the system breaks. This is where Brent and I will agree with collapse crowd. Long term, yes. Currencies lose value. Yes. Money printing continues. Yes. Real assets win 100%. But before that happens, there is a squeeze. And that too, a brutal one. And if you're positioned too early, you get wiped out. And that's exactly what's happening right now with us. But again, that's a different story. Most traders don't lose money because they're wrong. They lose because they're early. So here's a likely sequence. Number one, crisis, war, panic, inflation. Number two, the dollar spikes, liquidity squeeze, dollar strength, asset sell-off. Three, emerging market breaks, debt defaults, central banks panic. Four, money printing, stimulus returns, liquidity floods back into the system. Five, Gold, commodity, and hard assets, they boom. So most people, they jump to five first. They think gold's going to rise. They think hard commodities are going to rise, but the opposite happens. And then they get destroyed in phase number two, where the USD strengthens. And I think we are in phase number two right now. So now traders think dollar is bad long term, so I'll short it now. And then they get squeezed because the market doesn't move in straight line, guys. It moves in phases, violent ones. If you're still holding blind biases, this market is going to punish you. Adapt or get wiped. So let's lock this in. The dollar isn't strong because it's perfect. It is strong because the system is dependent on it. Crisis creates demand for dollars, not optimism, survival. The world is short dollars, and that's the real trade. The squeeze comes before the collapse, so timing is everything. Relative strength beats absolute logic 100% every single time. So next time you see headlines screaming, war is bad for the dollar, ask yourself that question. Bad compared to what? Because in this game, there are no winners, only survivors. If you want more breakdowns like this, no fluff, no nonsense, just edge, hit that subscribe. Because the market doesn't reward opinions, it rewards understanding. And now you're starting to see the real game. I'll talk to you soon.